Is it possible we'll see more homes for sale in 2025? Yes, it is possible. And according to a recent survey, you might be surprised at the group of homeowners who are considering selling in 2025. We're going to talk about that today. We're also talking about how the housing market is divided in the country due to migration trends, which is pretty interesting. So let's get into it. All right, who will be selling next year? Pandemic home buyers might be the biggest group of home sellers in 2025. And that's pretty surprising because we all know that those pandemic home buyers got the best interest rates you could ever imagine. So why would they want to leave those homes? They're saying that 1 out of 5 current homeowners say they're considering selling their home in the next 12 months. And surprisingly, it's not the older baby boomers who've lived in their home for a long time and own it outright. It's actually the homeowners who have bought recently and they need to move due to changing financial or family circumstances. So this article is saying that many of these recent buyers were able to take advantage of low rates, and they've accumulated significant equity in their homes because of that, because home prices have escalated pretty quickly after they purchased their home. They have a low rate, and the pandemic has created a situation where these homeowners are able to move up quickly or quicker than those prior generations. So they're talking about how the length of time in your current home has really shortened compared to what we've seen in the past. 32% of homeowners who have lived in their home for less than 5 years are planning to sell, and only 21% are not planning to sell. From the time frame of 5 years to 9 years of ownership, 30.8% are planning to sell and 21.4% are not planning to sell. And then for homeowners who have owned for 10 years or more, 37% are planning to sell, while 56.7% are not planning to sell. They're saying that younger homeowners are more likely to sell in 2025. Homeowners in their 30s and 40s are going to be the most active group of sellers in the months ahead, with 26.8% of homeowners ages 30 to 39 and 28% of homeowners ages 40 to 49 expected to sell in the next 12 months, compared to just 10.1% of older homeowners. So if this information pans out, we may start to see more homes hitting the market in 2025 simply because more homeowners have equity and has allowed them to really make a change in their household situation because they have the equity to do so, whether that's more than likely a move up type of buyer or just switching maybe locations, relocation for a job. They just have more flexibility to do these types of things. According to the survey, family and career changes are the main drivers for these sellers. 36.7% of homeowners between the ages of 30 to 39 said it was for job reasons, like a career change or a move for a new job, and 34.4% said family reasons were prompting them to move, including marriage, birth, divorce, or being closer to family. So I think we all can agree that more inventory on the market would be a welcome change in 2025. So hopefully this survey is an indication of something to come in the future. Now keep in mind, this was looking on a national scale. It's not specific to Phoenix, but oftentimes we are seeing similar trends. So while we are talking about 2025 predictions, let's look at what the housing experts are saying out there. Here's 5 housing market predictions for 2025, according to economists. First, they're saying that home price growth will return to pre-pandemic levels. And I will agree with this. I think we started to see a little bit of this year. Most likely this will continue. They're saying that the median asking price for a home in the US will likely rise 4% over the course of 2025, a pace similar to that of the second half of this year, according to Redfin. That's a normalization compared to the accelerated growth that we saw since 2020, which is true. So usually what we'll see with housing appreciation is that it follows the level of inflation. So somewhere between 2 to maybe 4%. What we've seen over the last few years has been double digits and absolutely not normal. So having this normalize would be a really good thing. They also say flattening rents with more room to negotiate. I talked a little bit about this last week where we were talking about how it was possible that 2025 could be a renter's market because we would start to see more rental inventory coming to the market, and renters would have a better opportunity to negotiate. So this is talking a little bit about flattening rents, not necessarily rents declining, but still seeing some movement in rents that are more favorable to renters. We also have a prediction about bumpy and volatile year for mortgage rates. That could be very true. I've seen predictions for mortgage rates anywhere between 5.5% to 7% next year. My bet is that we will hang around the 6.5% range. I don't know that we will be around the sixes comfortably for the majority of the year, but who knows? I could be wrong. Redfin says that we'll average 6.8% in 2025 and hover around the low 6% range if the economy continues to slow. Even LendingTree says we're sort of in our uncharted territory. It's really tough to say exactly what's going to happen. So the experts aren't entirely sure either. The next prediction, more home sales in 2024. Pent-up demand from buyers and sellers on the sidelines may drive home transactions next year. I would say that is a fair prediction because I feel like we have nowhere to go but up at this point, considering our home sales volume for the last 2 years have been the lowest that we've seen in almost 30 years. So I think we could make a move upward on those. They also say that climate risks will bake into home prices. They're saying the risk of extreme weather and natural disasters could anchor down home prices or slow down home price growth in areas like coastal Florida, California, parts of Texas, which are at high risk of hurricanes, wildfires, and other disasters. They're saying that home insurance policies in some of these markets are harder to come by and tend to carry high price tags. So that's something to consider if you're looking into those areas of the country. There are so many forecasts and predictions for the next year, and it's really hard to know what can actually happen. I've seen everything from price growth from 4% to almost 11%. So it really depends on who you're listening to. But I think all of it is good to take into consideration as you're planning your moves in 2025. So let's talk about mortgage rates because last week was not a good week for rates, unfortunately. Mortgage News Daily's article on Friday said, another red day. Is there any reason for hope? And basically, they're saying that the bond market could not catch a break last week. Data hasn't been unfriendly either, with both CPI and PPI hitting forecasts at the core monthly level, not to mention higher than expected jobless claims. Despite that, rates have risen every day this week, with the biggest sell-offs, ironically, on the days with the not unfriendly data. Friday is effectively data-free. So long story short, rates just continued to go up last week, and you can see on this chart here how this looked. Starting the week, I think that was Monday, 12/9, and just a straight climb upward, where we ended last week at 6.9, started the week around 6.6. So unfortunately, not the best week for mortgage rates, but keep an eye on all of these things if you're a buyer out there. Things can change pretty swiftly. We do have the Fed meeting this week, although that is not likely going to affect mortgage rates. It's just something we want to keep an eye out for. And as a reminder, if you are looking to avoid the current rates of today, consider buying with an assumable mortgage. I know it's not as common and it's not as easy to find those opportunities out there, but if you check the description below, I have a link where you can see a number of homes for sale with assumable mortgages, and my team can get you some additional information on that. So like I said, the Fed is going to meet later this week, and there is a 97% chance that they will cut the interest rate by 25 basis points. Again, this is not going to affect mortgage rates. This is something that has already been baked into the rate, already really decided at this point. What could affect the direction of mortgage rates is the commentary from Jerome Powell. So depending on what he says as he's talking about their move into 2025, their plan for 2025, additional cuts, or if they're going to hold steady, whatever that looks like, that type of commentary could affect rates if it happens to be something unexpected. So always good to pay attention to what comes from the Fed meeting, but that 25 basis point cut is really not going to affect mortgage rates as they stand today. Now, I mentioned that migration is dividing the housing market, and I want to get into this a little bit more because it's totally flip-flopped from what it used to be. Before I get there, however, if any of this is helpful for you, consider subscribing or share it with someone who would find it valuable. So there's this interesting article where it's talking about how the housing market is divided into basically two different sections, and it is not the same as it used to be. So for years, we've seen Americans moving to the Sun Belt. So from Chicago to Arizona and Texas, from New York to Florida. In the last 2 years, especially in 2024, they've stopped moving. So obviously this affects what's going on in Arizona. Inventory is built up dramatically in the South, and at the same time, the number of unsold homes available in the Midwest and Northeast are still very tight. And I've heard a lot about this, especially in the Northeast, of how tight the market is there, how they're definitely seeing a pretty strong seller's market. Not long ago, I was speaking with a friend who knew someone who was purchasing a home in the Boston area, and they just had incredible competition when they were buying this home, had to buy cash and waive all the contingencies, all the things. And it's just wild to hear stories like that happening so often in that area when it's not really the same here in Arizona. And this is really a good indication of what is probably going on with that. So they're saying that the number of unsold homes available in the Midwest and Northeast are still very tight. Some markets in the South, like Austin, Tampa, and Phoenix, have had more homes for sale than they've seen in years. On the other hand, markets in the North, like Chicago and Boston, just barely more homes unsold than even during the pandemic. So they're saying the country has basically been divided in two. If you live in the South, it can be tempting to look around and see doom in the housing market. And if you live in the Northeast, you could say home buyers still have it tough. So basically, these migration trends of where people are heading has totally flip-flopped, where we're seeing more migration to the Northeast and the Midwest and fewer people moving to the South and the Sun Belt. In terms of inventory, we all know inventory is up. There were 707,000 single-family homes on the market heading into Thanksgiving weekend. That's 27% more unsold homes on the market than last year at this time. This is right where we've been expecting inventory to end the year. There are now only 18% fewer homes unsold available on the market than in November of 2019. So we're almost back to pre-pandemic levels of inventory. Of course, we're looking at this nationally in this article, but as you all know, if you've been following my channel, we were seeing an increase of inventory here in the Phoenix area as well going into Thanksgiving. We continued to see those active listings increase, and we do have a higher number of inventory here than we've seen in the last few years. So this migration trend certainly has an effect on our market here in Phoenix. And while we've been seeing more active listings on the market, is that because we've been seeing more sellers list their homes, or is it because we have fewer buyers because we don't have those migration trends? So let's look at where our active listings are at today. We have started to see a decrease here in Phoenix over the last few years, which is completely normal. This is usually what we see this time of year. You can see that we're still higher in inventory than we were last year at this time, and then of course the previous few years as well. But when we click all of these dates going back in time, we have to go back pretty far to get to the level of inventory. It was 2016 the last time we saw this many homes on the market during this time of year. So seeing that decreasing trend is a good thing. It means we're following seasonal patterns, but it will be interesting to see what happens as we start the new year, if we start to see that inventory going back up and whether or not our demand follows that as well. Now let's talk about the CMI. We are at 87.3 this week, which is technically a buyer's market. Anything below 90 is technically a buyer's market. According to the Cromford Market Index, we have our demand at 77.2, so that's about 23% below normal, and our supply at 88.4, which is only about 12% below normal. So definitely seeing a pretty big difference between our supply and our demand, although the supply is beginning to fall. So if we see our supply fall more, our demand stay the same or even increase, that's going to bump us back up into a balanced market according to the CMI, of course. Now let's look at every major city and their CMI. I got some news for you guys. It stopped cooling off. I know like 2 weeks ago, we officially hit a cold market and officially, we were talking about how things continue to cool off. The cooling trend has stopped according to the CMI. Okay, so just as we're looking at the numbers, over the last month, the average change on all of these cities was negative 0.1%. Last week, it was negative 2.1%. So that's a pretty big difference. We're still seeing a lot of red arrows, still seeing a lot of cities, move in that direction, favorable for buyers. However, when we look at that average change overall, that momentum has slowed down. So I think over the next 2 weeks, it's going to be pretty slow in general. We probably won't see too much change on this. And then it takes a little bit of time as we get into the new year before we start to see the direction that we're heading. But regardless, we'll be keeping an eye on these things. Now, the contract ratio, this is what hit an officially cold market a couple weeks ago. We're still in that zone here, a lot of green, a lot of blue, and only a few zip codes with some yellow. And if we look at the actual value for the overall market, we're sitting at 31.2, so it actually went up just very slightly. 30 is considered a cold market. We were at 30.4, 31.2. So this is showing that indication that we have stopped cooling, but will it stick? Will it not? It's hard to know. If you're a seller and kind of wondering, is it worth me putting my house on the market right now? What could I even get? Check the description. I have an instant home value for you. And buyers, don't forget to check out that assumable mortgage link. I will see you guys next week on my next market update.